traders, how are you? Vladimir here from Home Trader Club. In this video, I would like to share with you my weekly Forex forecast, and I will be covering 3 trading opportunities I found here for you this week. That would be the silver, EURCAD, and Swiss yen. 3 opportunities which I believe should be very, very interesting ones. But before we get to the charts, let's take a look on the economic calendar we have this week, and there are several events which you will want to pay attention to. So the first one would be on Monday, the Empire State Manufacturing Index in the US. A very important from my point of view one is the eyes of the Fed and their decision what and how to operate with the economy, and of course the effect it might have also on a raise decision on the coming rate. So this would be on Monday, and then we have the CPI report in Canada on Tuesday. On Wednesday we have the CPI report in New Zealand and Britain. In Britain it's going to be annual one, so very important. And then we go to the unemployment claims, the weekly data from the US. And Friday, very busy day, mainly from Europe, where we have the flash manufacturing PMI in France and Germany, and also the same PMI about the services, and same will take place in the US. And also, let's take a look on the previous week results. So in the previous week, data and the numbers, also it started slow, of course, due to all the Easter thing. But then on Wednesday, what we saw finally is the CPI, both the monthly and the annual reported numbers surprised well. The pressure the Fed has with the high interest rate seems to do its work, and we can start to see how the numbers slow down more and more and more and more, which very likely brings the expectations from traders and the investors to the Fed not to hike the rates so aggressively as he did, and so much more as maybe originally he intended, and hopefully by 2024 or maybe even earlier to start and taking the rates to the downside. So this was the main event. Then of course we had also the numbers from the Australian unemployment change, the unemployment rate and employment change also, which is pretty good by itself. The GDP in Britain, and we saw some also negative numbers in the US. It was on Thursday and Friday. It was the core PPI, and the retail sales, which surprised to the bad side, even very bad size. However, very understandable under such pressure, and in the economy and the financial situations, it makes sense. People spend less, bottom line. And now let's go to the charts and start talking about the interesting opportunities we have. So the first one will be the silver, and I want, before technical analysis here, I want to bring your attention to the statistical part, and I will explain how I use that. Take a look what happens here. Okay, the massive reaction to the downside during Friday, but what catches my eye here is this. Take a look on 16 and 14, very powerful bearish days. And well, since it's a weekend, of course, then that happens during the 16 is the weekend, right? So 14, boom, massive bearish movement. And I believe, I will explain the technical analysis behind it, but I believe this is a place where we should see some corrective pullback before the next very possible rally to take place. And the next rally to take place, if we go to the bullish days, then then what we can see here is we have 18, 21, 28. So 18, 21 is the first zone that could be by the mid-week, but a week after, by the end of April and beginning of May, 28th to the 1st, this range of windows, few days, because it's never specific date, could be the one that we will see the bottom taking place and the price pushing through. Because take a look also what happens with the trend here on the indicator. Okay, the swing lows are created, and very likely to assume that there will be also swing highs here with the trend cloud. So definitely pay attention to these days. And also on the silver, I want to show you here some very interesting numbers. That's how I love to take my decisions when I love to join the trend. Take a look. This is a trend snapshot from Home Trader Club. Okay? So if I go to the silver, I have here two sources, so don't get confused here. The data feed slightly different. That's why you see the numbers slightly different. So take a look on the, if I stand here on silver, 24 hours, 7 day, and 1 month. In the last month, the silver rallied over 20%. In the last 7 days, over %, right? And on the last day, we got the corrective structure. So the longer term movement here within the last month is without a doubt bullish. Okay, shorter term, the daily is still bullish. The correction is very likely building up here since the last 24 hours. And that beautifully builds up in the analysis and the expectations we just saw before with the statistics. And now let's go to the analysis. So what do we have here? So starting from the higher time frame, I believe that the beautiful bullish momentum the silver has is here to stay. It's a first leg and a second leg and the corrective movement. And I don't think it's over. I think that after any reasonable pullback, we should go and finalize this rally. In the previous swing highs is the zone where I would expect the silver to reach at least eventually in this second corrective leg. If we plot Fibonacci expansion on these two ongoing legs, we will see that the 100%, the equal legs level will take us all the way to the previous swing high, which in that case would be a classical supply area. So for me, it's expectations for further rally after a short-term pullback. That's based on the weekly. Dropping down to the daily chart, and here is what we can see here. Right now, after breaking through the Bollinger Bands, we reach the zone of very close to double duplication, okay, two duplication. But besides duplication, we have riding of 20 plus candles. You can see the cloud here. Every time such thing happens, the pressure starts to build up, and eventually the market finds a way to go and make the correction to the bottom of the opposite band at least. The last time it happened on the bearish side was here and here, and you can see the reaction the market does. That's one of the indicators I love to do analysis with in the Bollinger when I involve the Bollinger Bands inside. Besides the Bollinger Bands, we have a fantastic supply area from the daily chart, a slowdown on the histogram of the MACD and RSI that is bounce of the overbought conditions. That makes me think there is a good chance that this zone puts some pressure to the downside, and every rally that could take place here might turn to be a fake rally and price to push. But as soon as the price managed to make the pullback back to this inner zone, or ideally back to the volume profile based zone, as you can see here, I believe the market will find the reason, and the reversal signs here will start to build to go and to complete the rally as I explained on the weekly chart. So for me, it's a short-term drops, long-term rallies on silver. What are your thoughts? Share with us in the comment section below. And also, if you have any question, please don't hesitate to ask. The next one would be the Swiss yen. And before I explain the technical analysis, I want to show the same numbers we saw before on silver, all the way from the pure numbers on the heat map or the trend snapshot we have in Home Trader Club. Take a look on the Swiss yen. So the monthly change was over 3%. The last 7 days as well over 3%. And the last 24 hours, we can start to see a little slowdown in the bullish trend. So the bullish trend here is absolute. And what is really catching my eye here, again, I love to join the trend after when the long-term numbers are bullish, after we get the pullback. Okay, so as soon as we start to see the 24-hour chart, maybe even the 7 days become close to the break even or the zero growth or even slight negative, that's the opportunities to start looking. That's the opportunities to go and look for the buys. So first of all, why do I expect the Swiss yen to make final rally? Simple analysis from the higher time frame teaches us that we are still in a bullish trend, and this wave is yet to complete. Now, the interesting part here, I believe that as soon as that one completes itself with a divergence to build or over bought conditions to build, we might see here an absolute beast again with this. You see yourself with the upper Bollinger Band ride. Last time it happened was here. We saw the reaction, which was massive. I have no doubts. I have no doubts it will happen the same this time after the top would be completed. However, I do not think the top is completed. And if we go to the weekly chart, what we can see that the structure of the higher highs, higher lows is still there, and we never got ending conditions. So for me, the bullish view is still on. I expect one more high, or at least the price to go and do some very strong attempts to break through the high and potential double top, eventually to build up. So on a longer term and the shorter term, I'm still bullish. Going down to the daily chart, we can see that we still have higher highs on the chart and higher highs on all the indicators in full synchronization, which makes me think that it's not over and the final push is yet to happen. We do approach right now to the 150, which is a psychological round number, very likely to assume a pullback will happen. That's exactly what I want to see, pullback and rally. We have some supportive lines, and on the way we have a supportive rising line on the way. If it's a deep pullback, personally I'm a little bit doubtful it will. So I expect to see the pullback and the rallies. And if we go to the 4-hour chart, right now you can see the Bollinger Bands ride for over the 20 candles. Again, it does put the pressure. So the previous highs, the 20 candles ride, the psychological number of 150, and the slowdown we start to see here on the indicator, that very likely we should see here a pullback taking place. Okay, as I said, we do have corrective supportive lines here. We also have, if we plot the recent trend lines, we will see here beautiful rising supportive levels. Depends how deep the pullback will be. So this will be the first zone. I'll be looking for possible buys, and then the next zone, the massive volume we have here around the 146, 145, if it drops that deep, and with the rising trend line from there, be expecting for further rallies. So this is my view on the Swiss yen. I find it absolutely interesting. And a quick observation on the possible statistical days to start looking for the bearish pullback. So we got 14, but we don't have yet bearish signs on that completed. The next one, 21st. So if the sales do not happen right at the beginning of the week, we might see this slowdown taking place. And closer we get to the 21st, the pressure would increase, and that's to happen in the second part of the week potentially. So that's the date I would be paying attention to, the 14th, which already created the top here. And if not, closer to the 21st. Keep in mind, not always the market is absolute and accurate right on the peak or right on the day. So these days give us the idea to understand where a top is likely statistically to happen. And of course, that combined with the analysis and the price action could provide great opportunities. And the final one would be the Euro Canadian. Beautiful opportunity as well. So what do we have here? Okay. Falling resistance line, we currently reject and hold. Besides that, the price went to the supply area we have here from the weekly chart, and we can start to see the slowdown on moving average divergence on the weekly chart, on the MACD, histogram, RSI. Beside that, we also can see the Bollinger Bands pressure on the upper side. So eventually this is a zone where we could see the correction building up in several weeks. Going down to the daily chart, and we can see these waves in much cleaner structure, coming to the end with this bearish divergence. Again, moving averages of the MACD, RSI, everything is there. But there are two scenarios I follow. The first one would be based on the zigzag reversal structure, which means 2 waves to the downside and 2 waves to the upside. So if the price managed to go and hold below this area, that's a potential correction taking place. And the second scenario is the buyers maintain the control, manage to make one more fake rally, okay, completes a fake high on the chart, and then bearish divergence on the most recent highs, and from there a massive pull back to the downside. It's a massive, it could be all the way close to 600 to 800 points. So these are two straightforward classical scenarios I am following for the EURCAD. I believe they could be absolutely interesting opportunity. What are your thoughts? Are you bullish, bearish? If you have any questions or any inputs or insight, don't hesitate to ask in the comment section below this video. So that's it for this video. I hope you find it useful and helpful in your preparation for the trading week. If you do appreciate the video and the analysis and the opportunities, please make sure you hit the like button below the video. Subscribe to the channel if you still didn't do so, and I invite you to join us in our trading family, the Home Trader Club, where you will get your access to our full trading courses, both for beginners and advanced, real-time trading opportunities, real-time trading education, and of course access to myself and my trading community. Join us with the link below this video in the description. Thanks for your time watching this video. I wish you and yours all the very best. I'll see you soon with more. Bye for now.